So this is the way that I would do this. This is why you guys pay me the big bucks. What a product when you don't need to advertise it and your product is still growing and growing. Really interesting business problem. This isn't just about one stock. This is about a process that you could repeat for lots of stocks. The next part requires you to put your thinking cap on. This is the part that makes you rich. How many hotel stays occur in the US? AirBNB is a really fascinating company, and it's a great way to test whether or not you can forecast correctly. If you can forecast a company like this or like Netflix, you can forecast anything. Just a funny decline due to COVID. Oh well. Let's go back to AirBNB. Anything interesting going on in the market? I saw the market didn't react to the CPI number, and then now it is. But again, I try to ignore such things because it's really hard to be an expert in macroeconomics. There's a lot of people that are experts in macroeconomics. So there's no real point in, if you're trying to pursue a career on Wall Street, are you going to work for a macro fund, or are you going to work for, the Bitcoin price is right, the close price is not right. So have it at a reference point price instead of the daily close. I don't know if the market will go up or down. I was just explaining that I don't think you should really care about that. Why would you care about that? What's the point? Are you going to work on Wall Street and try to work for somebody saying, oh, I know when the market goes up and I know when the market goes down? That's not a career. You should focus on what can you market. If you become the expert in semiconductor stocks, someone will want to hire you. And maybe you can make money, in semiconductors. But you certainly are not going to convince anybody that you know when the market's going to go up and down because you study inflation and you know more about inflation than anybody else. I mean, there's nothing wrong with pursuing a degree in economics, but I don't think that's what's going to get you there. Yeah, I mean, most people are just gambling when it comes to the macro. I'm highly leveraged, aka I'm gambling. Macro will affect all of your industries equally, so you don't really have to follow the macro. If you worked at a hedge fund and you start talking about CPI, people would laugh at you. Unless you're a macro trader, that has spent your whole life on macro trading. Then in which case, which I'm not, by the way, then you don't have to worry about it at all. All right, so it does look like there was some, I guess, COVID pickup period. Let's continue to look at this for AirBNB. It's another company that's kind of operated outside the law in a lot of ways, sort of like Uber. Don't appear to pay taxes, but that's probably because they lost gobs of money during COVID or something. All right, this is the 10K for AirBNB. So if you haven't glanced at it, here's a chance to read an important document. The 10K represents the annual report for the company. It gives you all of the details about the business. Really critical to read these 10Ks. I remember in my college library, we'd have annual reports. I thought it was pretty cool, lying around, so you could always pick up an annual report and read something like the AirBNB annual report. So really cool college perk I had when I went to. Interesting situation here for AirBNB. Let's take a look. Their 2019 revenue. This is all because of COVID, right? So this is like the most messed up thing that could happen to a new business. Obviously, it's the most messed up thing that could happen to society too, but we just have our business hat on at the moment. So they had 4.8 billion in revenue, right? And then for 2020, they had 3.4. So 4.8 to 3.4, big decline. And then 2021 picked back up, and we can see kind of what pace we're on for. It's very seasonal. You can see all the revenues in Q2 and Q3. And then I guess in the winter, people don't really use AirBNB. Again, I'm not an expert at AirBNB. I've only used it once. And again, I strongly encourage everyone to sort of ignore their own personal experiences with these stocks. I know there was this big meme when I was a kid. I actually remember quite vividly reading One Up on Wall Street by Peter Lynch in around probably April or May of 2000. I was living with my parents at the time, and wanted to be a stock market genius, and I read about Peter Lynch's advice that, you can go to the mall, your local mall, and sort of see what stocks are doing the best by seeing who's selling the most product and stuff like that in your own mall. Now that's nonsense. I really think there's no benefit to doing that. Investing is a lot more sophisticated than that. There's no doubt that obviously there's some, feedback you can get, but the stock market knows this kind of stuff. The stock market knows if a company's business is doing well. Maybe things were a little different in the Magellan days. And I don't want to take anything away from Peter Lynch, who did very well. But, the world's changed quite a bit since then, and I really wouldn't endorse that approach. Investing is about buying something for the right price. That's something that I try to stress to everybody. There are good companies, there are bad companies, but in a lot of ways, that's not that relevant to the investor. The investor buys at a good price. There's some great companies like Apple where there's just not a price that, you would ever want to use that price as your purchase price. And there's some terrible companies that, you'd want to buy at the right price. I'm talking a lot like a value investor. Of course, in the long run, growth tends to obscure the utility of price and price discipline. For example, if you really were convinced that Apple was a great company 10 years ago or 15 or 20 years ago, it would have been a great call no matter what price you paid. But that requires like a really unbelievable ability to see the future. And often that's fairly stochastic. AirBNB, 4.8 billion, 3.4 billion, so that's COVID, down 30%. Up to 6 billion, that's the COVID rebound. And then 40% growth for 2022. Pretty interesting. I have this like natural aversion to this company for some reason. But as I'm glancing at it, I think like it could be a long. And again, I'm trying to let my psychology talk to me and listen to it, which is something a lot of traders have trouble with. There's a lot of talk about this in Ari Kiev's book, Trading to Win, which I highly recommend if you want to learn how to trade, which again is not my thing. If I was trading, you'd see me with 35 screens, 6 cappuccinos, 4 assistants, 2 phones hanging off of my shoulders, and that's just not a fun way to live life. Oh wow, look at that product development cost. I wonder if that was a one-time item in there. I don't understand what got into people for those stocks. Like what a crazy dynamic. There's so many things wrong with that whole situation. I don't think every good investor has an edge. I don't like that word edge. It's in old Wall Street was synonymous with insider info, basically. All right, let's look at this nights and experiences booked. I don't know what that means. Nights and experiences booked. Is that the way they measure their business? 300.6 million nights. So that's almost 365, but it's a more global business than I thought. So 114 million nights in North America. That means that in any given day, 300,000 people are staying in an Airbnb on any given day. I should probably call these stays instead of nights, but I'll use their terminology for now. They have more EMEA usage than North America. That's impressive. So nights grew. Let's see if nights grows faster or slower than revenue. Probably the same. So we can also get ARPU. Okay, nights grew faster. So 6 billion revenue for 300 million nights means $20 for Airbnb every night. So they're getting like a 5% fee or something like that, right? We don't have the gross market value. There it is, gross booking value. Probably don't need this geographically split quite yet. 46,877, it'll be lazy. And just take the total amount. Look at the North America revenue is a lot higher than EMEA, even though there's more nights. So the average place on Airbnb is much more expensive in North America, which makes sense. So most prices are out of control. All right, so the average Airbnb is $156 a night. Remember, that's global. So the average North America, let me just do that. North America GBV. This is kind of similar in a lot of ways to other models I built, where you have to sort of look at the whole hotel industry. How large is the hotel industry, period? And then think about how much can Airbnb take of that. That's the right way to model this. And that's probably, made some venture capitalists pretty rich. Pretty great investment if you could made it, right? All right, so the average North American Airbnb is $222 a night, which again, in New York City, is quite a bit more. Oh, look at this, just the data I needed. We want to go back in time for Airbnb all the way to the distant past of 2016. I don't even remember 2016. So isn't that a funny chart? They basically have been able to weather COVID. Isn't that crazy? Look at this. Oh, okay, they have a typo, thank God. 37962.6, there we go, okay. Just a funny, decline due to COVID. That's weird, their 2021 nights has not fully recovered from 2019, even though GBV did. It's a little odd. Make sure I'm getting this right. That seems like, because it's so weird, because revenue is higher. I guess it just had really low ARPU, or GBV per night or whatever. So even though they had fewer stays, they had more revenue and more GBV, gross booking value for anyone curious. It feels a little weird to me. This is really great business lesson for me as well. Airbnb is a really fascinating company, and it's a great way to test whether or not you can forecast correctly. If you can forecast a company like this or like Netflix, you can forecast anything. Wow, look at the COVID quarter. They basically had no bookings, which makes sense. But they had a pretty good next quarter. It's crazy. Down 72%, holy moly. Well, glad they got through that. This is a really interesting company. I'm really enjoying this. Now we'll get to the fun part. This is sort of the maintenance part. Just perusing the past of the business. Now we're going to think about the future. This is much more interesting and much more fun and much more difficult. This part's quite easy. Anybody can do this part. Lord knows you've seen me do it enough times. You should be able to do it 1, 2, 3. The next part requires you to put your thinking cap on. Get a cup of coffee and really start to get cerebral. This is the part that makes you rich. Or the other way around. Many times, both. I should probably plug in Cashflow just so we have a sense for that. I don't think it's going to matter that much, but I think it's useful. They don't have much CapEx, which is good. I won't say good, it's just a fact. You get one more cash flow number, basically. Okay, ton of cash flow in 2021. So the company actually, even though the net income was reported to be $500 million, they actually generated $2.2 billion of actual cash. So real profits. and almost no CapEx, only 25 million of CapEx. So I'm guessing they just run on AWS or something like that. They have an AWS bill, and that's how they have CapEx. So this is the way that I would do this. This is why you guys pay me the big bucks. How many hotel stays occur in the US every day or every year? What would you guess? 10 billion? Over the course of a year. Or it's 365 days. So if 10 people are using hotels, 1 million people are using hotels every night, that's 365 million. Is 1/365th of the country in a hotel on any given day. US hotel stays. Hotel stays annual. This is occupancy rate. I don't know that we want that. So there's 5 million hotel rooms, 66% occupancy, 56,000 hotels, but there's motels too. Occupancy 57, 58%. RevPAR is revenue per available room, which is an industry statistic. 52,000 hotels. Again, the number of hotels doesn't really matter to me. I'm really thinking about the number of rooms, maybe. Here's an interesting statistic. 142 billion in revenue. All right, so it looks like Airbnb has like 10% market share of all hotels, but they've also kind of created a new kind of experience in a lot of ways, right? Also want to see Airbnb's fourth quarter. So again, 1.3 billion rooms. It sort of solves the occupancy problem, right? So the problem with the hotel is you have an occupancy issue where, a third of the time your room is empty and you don't make any money. With Airbnb, there's no real occupancy problem, so they can kind of operate more efficiently. What percentage of hotel stays could actually be done through Airbnb? And again, it's sort of an extra new experience, right? It's not like, this is tricky. And if you think about it, they have like 6% of global hotel revenue. This is a really interesting business problem. This isn't just about one stock. This is about a process that you could repeat for lots of stocks. I want to make sure I do it right. I might be less entertaining than some other streamers, but I think I'm a bit more cerebral. 9-month cash flow for Airbnb, 3 billion. That's record. All right, let's say they can get 25%. I've sort of settled on that number in my mind. They can get 25% of all the rooms in the US. They'd grow 30% a year for the next 4 years. Maybe they'll grow a little slower for more years, like that. But that's the gist of it, right? They do the same thing in the rest of the world. Their ARPU stays relatively steady. The revenue is nights times ARPU, right? Sales and marketing has not gone up. It's amazing. People just use Airbnb. That is so crazy. What a product when you don't need to advertise it and your product is still growing and growing. Isn't that crazy? Think about that. Oh man, I'm gonna hate this. If I love this stock, I'm gonna be annoyed because I hate the company, but I'm gonna love the stock. It happens. I'm gonna never use their product. All right, can they get this much market share of the hotel business? That's another question. That's where the discount rate comes in, right? Oh man, I guess I'm not gonna love the stock. See, I thought that was gonna be a big number, but guess what the share price I calculated was? 125, 126. Current stock price 116. Man, I guess the market's just really good at discounting. That's kind of crazy. I don't know why it would seem like it would be a lot better along than that. It's only like 20 times earnings. How could it not be a better long? Let me adjust my numbers until it is. That's what you should not do. That was a joke. Well, I guess there's this issue where even if they grow 20% for a little while, they're going to hit a wall. They can't replace hotels, right? They can't take over the entire hotel industry. So I did 25%, which is quite a lot. They're at 10% right now. And they reach a peak at 25%. So if they hit that 25%, that's already in the stock. You already get that basically in the current stock price. Some business says an Airbnb. I agree with Anthony S. The Airbnb process is a little annoying, but there are people who want, as I thought about that 25% number, I thought about people who really are price sensitive or experience sensitive, where they want a specific thing. And Airbnb kind of fits that pretty well for that chunk of the market. For the business traveler, it doesn't often make sense, but it can help a business traveler when hotels are really overbooked for conferences and stuff like that. I wouldn't think price either, but I would imagine there's some really smart shoppers that are sort of plan their experiences around that. Airbnb, I'd say conclusion, it's a great company. It's not a decent company. It's a great company, great business model, wonderful all over across the board, but probably not a great stock. Unless you can get comfort around the company taking a huge amount of the market for hotels, which for one company to take 25% of the entire hotel industry, it's possible. Doesn't seem likely, I guess. I don't know. Again, we have to do more research. I'd like to hear what management thinks.